Hello guys, welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about combined journal entries. In our previous video, which relates to application of golden rules, we have discussed the point of double entry system and how we record business transactions which impact two accounts, which can either be personal account or real account or nominal account. Now, in combined entries, more than two account heads required to be considered to calculate the impact of double entry system concept. So let's take some examples to understand the concept of combined journal entries. So let's move on to example number 1. The transaction says that it received rupees 3,000 from Peter, rupees 1,000 in cash and the rest by check. So kindly note, we are doing in the books of SK EDUINFO and Co. So we have received, the company has received rupees 3,000 from Peter, rupees 1,000 in cash and rest by check. So Peter is one account, which is a personal account. The other two accounts are cash as well as check, which is bank account. Now you can see there are three account heads: Peter, cash and bank account, because the transaction is not getting completed with cash. If the transaction would have completed with cash, then I would have said Peter and cash. But since it is not completed, we are taking Peter account, cash account as well as bank account. So Peter is a personal account, cash and bank both are real account. Now received rupees 3,000 from Peter. So we are receiving that particular money, the company is receiving from Peter. So Peter is a giver. And as per the personal account rule, a giver has to be credited. So Peter is giving 3,000 rupees, so it is a credit of 3,000. On the other side, we are receiving cash of rupees 1,000. So cash account, real account, company getting cash, that means cash coming in, cash will be debited with an amount of rupees 1,000. So the rest amount, rupees 2,000, you are receiving via check. So bank account, which is also a real account because it's an asset, and again bank balance going high because you are receiving the money, so it is debited with rupees 2,000. Let's move on with the next example. The example 2 states, paid electricity bill of rupees 5,000, 20% paid in cash and rest by check. So SK EDUINFO company has paid electricity of rupees 5,000. So we had electricity account, 20% paid in cash, so we will be having cash account, and the rest by check, so bank account. Now since we are paying electricity, it's a nominal account, it's an expense, so it has to be debited with an amount of entire amount of rupees 5,000. 20% paid in cash, so cash is a real account. 20% of 5,000 is 1,000 rupees. So we are paying in cash, that means cash going out from my pocket. So cash will be rupees 1,000, which is 5,000 into 20% is 1,000. Rest amount, so 5,000 minus 1,000, so 4,000. We are paying it via check. So bank account, bank balance falls, is going out, so it will be credited. Thus, electricity will be debited with 5,000, bank account credited with 4,000, and cash account credited with rupees 1,000. Let's move on to the next example. Paid rent of rupees 5,000 by check and telephone bill of rupees 500 in cash. Now we have paid rent of rupees 5,000, which the rent has been paid via check, and the telephone bill has been paid via cash, and both amount are different. So how many accounts head we are coming? There are rent account, bank account, telephone account as well as cash account. So 4 account heads are coming. Now rent as well as telephone are nominal account, bank and cash both are assets, part of real account. Now you have paid rent, so it's an expense, it has to be debited. You have paid telephone bill, it's an expense, it has to be debited. Now rent has to be debited with rupees 5,000. Telephone has to be debited with rupees 500. Now you have paid rent rupees 5,000 by check. So your bank balance falls. So bank falls or bank going out. So bank has to be credited with rupees 5,000. You are paying telephone bill via cash, which is rupees 500. So your cash balance falls in your pocket or is going out. So cash will be credited with rupees 500. Thus, rent will be debited with rupees 5,000. Telephone will be debited with rupees 500. Bank to be credited with rupees 5,000 and cash to be credited with rupees 500. Let's move on to the last example. amount received from Ram rupees 2000 and Shyam rupees 3000 in cash. Now you have received this particular amount from Ram, which is 2000, and Shyam 3000 in cash. So we have three accounts: cash, Ram and Shyam. Cash is a real account. Ram and Shyam, as you know, in the name of an individual, is a personal account. Now you have received cash, amount received from Ram and Shyam. So you have received cash, your cash balance in your pocket gone high, it's coming into your business. So cash will be debited with an amount of rupees 2000 plus 3000, because you are getting 2000 from Ram and 3000 from Shyam. So total cash you are getting 5000. So cash to be debited with rupees 5000. Ram personal account is a giver. So Ram will be credited with rupees 2000. Shyam, a personal account, a giver. Shyam will be credited with rupees 3000. Therefore, cash account will be debited with rupees 5000. Ram account to be credited with rupees 2000. And Shyam account required to be credited with rupees 3000. I hope you have understood the basic concept of combined journal entries. In our next video, we will discuss how we post the debit and credit in a journal format. Till then, thank you. Have a nice day.